Hello everyone, welcome to the live video for the Gamma Optimizer room. This is an out of band video, so I have to do it in YouTube because otherwise I will interfere with my other team members. Now there are other live videos in the room and we have a scheduled time. Mine is on Fridays, so we haven't had one in a couple of weeks. The first time because I was traveling, and the second time because it was Good Friday, So we haven't had a live video in a while, and that's what is good to do it today. As usual, just a quick sound check and video check. I am not sure if I have anyone here yet, but if anyone is here, just let me know, and you can see and hear me well. That will be fantastic. Otherwise, this is more like a recording for those of you that want to watch it later on. Also, YouTube has a longer delay compared to GoTo, so I know our interactions will be a little slower. I think Google has like 20 seconds delay, but anyway, anytime you can type on the chat that you can see this and hear me, that will be perfect. I'll wait just a few seconds. Otherwise, I'll assume that audio is coming through. Okay, let's assume that audio is working, hopefully. I know there is at least one more person here in the room, or at least two of you, so let's assume that it's, you guys just type and let me know if any issues are coming. So let's start with the meeting. Let's see what we have in store for today. Okay, so in terms of closed positions, what has happened for the last 10 trades, which is pretty much the last 2 weeks of what we had been without live videos now. So the system continues limping around. It has 4 wins at least, it has some wins and 6 losses, so it's kind of a mixed bag here with a low accuracy of 40%. So those are the last 10 trades, and we have around 520 loss on the last 2 weeks now, and most of that is in like the last 2 trades. So it's a small loss, but it's still a loss. The system hasn't been able to go back to profitable in a while, but it's still doing okay, I guess. At least it's doing better than it was doing before, and so that's what we have in the system. It is underperforming. It will take probably 4 wins in a row for it to go back about like 50%. It will take quite a bit of wins. It will have to win. Neutral trades are okay. They don't count as wins because sometimes neutral trades could be a small loss, other times it could be 0. For wins, it has to be bigger than 0. So we'll see. So overall, I don't think that Constant Stable is performing that good. It ended March with a loss. We lost some money in March, not a lot, but we lost some money, and it starts April with a small loss. We are down like 220 for April now. So it's not. The first trade failed, and then we have had a couple of neutral trades, including today. Today is also a neutral trade that it might finish neutral. Who knows? No one knows what is going to happen, what kind of tweets will come in the afternoon, but let's assume that it will finish neutral nowadays. For our practical purposes, I guess it's a good likelihood that it will finish neutral today. Okay, so of interest here is that Novix is killing it. The Novix system, which is in the Advanced Variance Center, has 90% accuracy in the same time period. It has only failed once in the last 10 trades. So yeah, it has had a couple of neutrals, but in general, it only missed one long iron condor, and then it has won every single one of them. It's making lots of money. It seems to be behaving amazing. Also of interest is that the Leo Profit system, for those of you that remember Leo Profit, which is a variation on Ultra Constant Stable that only does long iron condors or short iron condors. It doesn't do any risk reversals, has been killing it as well. It has made more than 1,120 profit per contract. despite a small loss in January, lost like $300 in January, and that was the reason I discontinued, because of the small loss in January. I didn't have patience with it because of the limitations of the trades, but I guess having to do a long iron condor or a short iron condor during uncertain times seems to be good. No, seems to work really well for the system. The system has done well because of the limitation. No, it's interesting that during a high volatile period where the market doesn't have a really good trend, it seems to be doing really well. So we have a mix back here. We have the official system is still underperforming, not a lot, but it's still underperforming. We have this Novix system that is too good to be true. No, it is on the too good to be true category. And then we have Leo Profit that I am tempted to bring it back as an alternative. No, because I know some of you don't like to do the risk reversals, despite those being really profitable when they work. So Leo Profit is a good one. Also, it's right there. I mean, it never went away. It's right there on the variance center. You can see it, and you can see that it's been making money consistently. So that's kind of the state of what we have in terms of trades. Let's look at the market now. So the GT level is 6,602. And right now the market is kind of oscillating around it. Now the market is kind of going back and forth about it. When I prepared the slides, we were slightly long gamma, and now we are like 7 points or 6 points below the GT level now. So the market has been really fighting to flip long gamma. It seems to be the narrative right now. So I seem to be having issues with the internet. Let's see and see if it could improve at some point. Guys, you can tell me if you are watching right now. Just let me know if you're seeing any issues on the quality of the video or the quality of the audio, and see how it's working now. Just let me know. I'm just getting. YouTube is always interesting when it provides information. It's not that explicit about what is wrong, but I think it's dropping quite a bit of frames right now for some reason. So okay, now it's coming back. Okay, so in terms of the GT level, as I mentioned, the market seems to be this is kind of dropping tons of frames. So I think probably is my Wi-Fi connection that is not good. I'm going to move to a better Wi-Fi reception and see if it improves. Just be patient. Sorry, I apologize for the little delay, but I can keep talking about the GT level, which is of interest is that it's coming down quite a bit. Well, right now it moved up versus last week, but in general it has been moving down quite a bit. So let's see if I here have a better reception. Let's see what OBS is telling me. Okay, now it's telling me that it's much better. So yes, it could be Wi-Fi. But despite the market being right there, we are neutral for all practical purposes. No? So imbalances are low. Hedging activity from dealers should not be an issue at all. No? Hedging activity from dealers should be pretty much negligible at this point. Interesting is that, to me, the interesting thing is the market is trying to be long gamma again. No? So that's kind of interesting. That it really, really, really wants to be long gamma. That despite the uncertainty, the geopolitical events, the craziness of the energy markets, the market really wants to be long gamma. And we are seeing a big fight right now around the GT level. So we'll see. No? And also of interest, which this is, I mean, the neural nets don't know this, but we know we have a deadline for tomorrow, no, an ultimatum for tomorrow in terms of what is going to happen. But at least I think the clarification was 8 p.m. Eastern time. So I guess the session for tomorrow will be also kind of oscillating around the GT level, and it's only the session for Wednesday that will be uncertain in terms of what is going to happen now, if the ultimatum will be carried out or not. But we'll see. we'll see how it goes. So right now we are pretty much neutral, right there, right around the GT level. If I look at the imbalances are non-existent. No, they are like 21 billion to the downside and only 1.2 or 12 billion to the upside, which is a really low compared with other values that we have seen in the past. Okay, so that's kind of what we have in terms of the GT level. The market is right there. In terms of volatility, man, this really changed in the last couple of weeks. Now, this really changed massively. This is one of the biggest changes that we have in terms of the market behavior. No, so what we have right now is that we have around 18% close to close volatility for the last 20 sessions, which is massive. Now finally we are starting to see volatility at the monthly time frames. No, so it is interesting. And RB10 is also very elevated at 21.6 now. So volatility for the last 2 weeks has been really elevated, and for the last week has been amazingly elevated. It's like 23.8 now. So all of the across all time frames, close to close volatility has been elevated, and finally, I guess this is catching up with what we have seen in the intraday realized variance space and also on the implied volatility space. So finally, where liquidity has been disappearing from the market after dealers expected liquidity to disappear, and after it disappeared during the regular hours. So finally, the market now is moving, and I think that realized volatility going up is also one of the reasons why ultra constant and stable has improved a little bit. Not a lot, but a little bit. At least we have been winning some recently, and I think it's because finally realized volatility is catching up with expectations. But the takeaway here is that liquidity has been disappearing from the market, is what we are seeing right now. VIX remains elevated, although not as elevated as it was. It's 24.1%. So that means that variance risk premium, which is the difference between VIX and RB20, is really low now. It's only 6 volatility points. It used to be like 8, 13, 14 volatility points. So it's being reduced quite a bit now. Also, VIX computed for next Monday. It is 1 week VIX is the one that I'm computing. Is 22.6, which is elevated, but not as elevated as it has been, and also it is below where VIX is. So VIX is sitting at 24, and 1 week VIX is sitting at 22.6, which means that the curve should be in contango, at least not inverted. So I guess it's good to have a contango is something good. So in terms of close to close volatility, things seems to be catching up now finally. Liquidity is drying up, no liquidity whatsoever, and VIX seems to be normalizing. That's kind of an interesting development right here, the normalization of VIX. If we look at the term structure, then we can see it much better. If we look at the term structure, we can see that it is back at contango. And contango is when the term structure has lower values for the near term and it keeps increasing. So it's back at contango. Not only is back at contango, it's substantially lower than what it was 2 weeks ago. Substantially lower than it was on the last Friday. The Friday we were supposed to have a live video and we didn't. So on that Friday, look at this. Everything was inverted. Near-term values were above 30%, and then I think everything was around 27. In the long term. Now on the blue line is volatility today. You can see that the near term is below 10. And rising slowly, and I guess the highest volatility expected is around 25%. So this is an interesting development. It shows that dealers are coming to terms with pricing for options now. So implied volatility does remain elevated. It is elevated, but I think it's being priced in a different way. Either because of dealers made some changes to the model. Now finally they decided to make changes to the model, or new information has been incorporated into the models, or just because we have some volatility sellers coming in in size into the market. So maybe there are some volatility sellers that are forcing the hands of dealers. Now dealers have to compete with the volatility sellers, that the disconnect was too much. The disconnect between realized volatility and implied volatility was too much to be left alone. So hopefully some people are really taking advantage of it. No, so we'll see who else is taking advantage of that. But at least for us, it looks like it is doing well for us. No? It does look like it's doing good for us, and I think it's benefiting the neural nets as well. So the takeaway is that probably VIX might be having better information again now. So probably VIX is finally containing useful information after weeks and weeks or months of not having any information whatsoever. Now for months VIX has just been overpriced. No? That has been the nature of VIX. It has been overpriced without any rationality. I mean, the only rationalization behind the overpricing was the war in Iran. But as usual, no, wars are just can be priced easily, and I guess dealers now are finally being either forced to price it, or they have come up to a better way to price volatility. So that's what the term structure is showing. So at least it's improving, the term structure is improving over what it was a few weeks ago now. So it's a big improvement. And just a reminder, you can ask questions anytime you want, folks. Also, a reminder that because this is YouTube, there is going to be a big delay between my words and your question. So if you ask a question, it will take probably 15 seconds for me to 20 to pick up any feedback on the chat, and then for me to answer. So please be patient. That's the thing about YouTube. No, it's just a matter of patience. So anyway, so the term structure is back at contango. Dealer seems to be getting better at pricing risk, and things are more decently priced. No? So probably there is some kind of light at the end of the tunnel, which is interesting because the conflict, I don't see it as that is we are at the end of the potential time frame for the conflict now. It has the potential to last several more weeks, but at least dealers are getting used to pricing it now. Okay, so when you look at realized variance is also behaving in interesting ways. Now, realized variance is behaving in a very interesting ways because it remains oscillating around 15%. That seems to be the default value for it, oscillating around 15%. And in fact, in the last 20 sessions, we haven't been able to break consistently below 10%. You can see right there on the chart, only once we achieve it. Right here. I think this version of my streaming software finally shows the mouse. So if it's showing the mouse, hopefully it shows the mouse right here at the break. But it's only like one brief session, and then everything is above 10%, around 15, and then it drops a little bit, and then it comes back. It never settles. So that is a sign of a stress in liquidity. Liquidity remains scarce. We have really scarce liquidity right now, and it's not improving, no? And I know some of you, or a lot of you, are looking for a decent upside again, no? Your guys are hoping for upside in the market, no? For some kind of upside leg, some kind of wave to the upside. And I'll say that in order to see it, we need to get intraday realized variance below 10% consistently. So you just go to the variance center and check this chart, and the dark blue line should be consistently below 10. If you get like 2 or 3 sessions below 10, that's a very, very good sign, and it's an early sign that maybe upside could work in the market. No? But for now, we are not seeing that. We are still seeing lots of uncertainty, and it doesn't look good. No, I don't think that upside right now is the way to go. But if we flip long gamma and intraday realized variance goes below 10, then I'll come to the side of expecting near-term upside. For now, my thesis remains to the downside. My thesis As I mentioned several times in previous live videos, my thesis remains that we started a long-lasting correction in the market, and this correction still has ways to go. Now, the correction should happen to me across most of the year, and then we could reevaluate in September, October. We could reevaluate if the correction actually is something that will keep continue. But for now, I think a correction is always healthy. The market was running really hard, and it's good to see prices coming back and price discovery coming back to same levels. Now we have this geopolitical event, which is the war in Iran, but everything is just a nice excuse to rotate the portfolio and rebalance risk. Everything is just a nice excuse for that. So we'll see if it continues. Okay, so that's in terms of liquidity, which is really scarce, not looking good, but still it's not crazy. It's not like this is like 20 or 40. It's 15, which means scarce liquidity, but not absent liquidity. It's not that it disappeared completely from the market. Variance risk premium. Man, I was expecting this to flip negative, given how to flip like to 100%, given how options were being priced, and then I was expecting a negative flip with some kind of volatility event, but we didn't get it. We did get some extra volatility. You see the blue line is realized volatility. So we did see it increase, but the options were pretty much consistently priced, so variance risk premium has been decreasing quite a bit. Now it's falling hard towards zero, and now it could happen. The negative flip will happen in the next couple of weeks. So when that happens, then the edge will be to sell the tails. We will have a nice edge to sell the tails because this always oscillates. So if it goes negative, it will oscillate about becoming positive at some point. So for now, variance risk premium is pretty much zero. Is pretty much zero at this time, and it's kind of fair price. That means that dealers right now have fair pricing of options. The options are very fairly priced versus what actually happened in the last 20 sessions. At least from a month ago. Which is when the war started. The war started around a month ago, or just a little bit longer than that. So I guess options have been fairly priced, and I guess that's why dealers are also kind of repricing the models, because I think they figured out that they went crazy with the overpricing, and now things are coming back to normal. Okay, so that was variance risk premium. And let's look at ambiguity. Ambiguity is not an issue. I have been tracking it. It keeps moving down towards zero. Man, this is a relentless march. And with the market having extra volatility recently, this is expected. It's expected this to fall towards zero. It's not a factor, but once it starts to come back, once we start seeing it bounce, then I'll let you guys know. Because that could be, it could reach 0.2 really quickly. So for now, that's what we have here. For now, ambiguity is not an issue. Okay, so now let's discuss the trade plan. So ultra constant and stable is the official system of the room, despite the underperformance, which I don't like. But it has the potential to start winning pretty soon as this week. It has the potential to become green for April really soon, and I am really hoping for that, because I like the system a lot, and the system has been through all sorts of regimes, and I know it should come back to outperformance pretty soon. But now I am interested in Leo Profit. Leo Profit, actually, for those of you that have seen the performance for the year, has done really well in February. Decent in March. At least it didn't lose any money. It won. It's little, but it won in March, and it's winning in April. So it has been winning consistently, not like massive thousands of dollars, but it has performed really well during the same time frame that ultra constant is stable. So I like that Leo Profit seems to be less affected by VIX. VIX going crazy didn't affect Leo Profit that much. Also, I think the limitation of having to do long iron condors or short iron condors plays in its favor during really uncertain times, because you minimize losses. In particular, now ultra constant stable, when it generates a risk reversal, could lose up to $500. No, but something like Leo Profit only could lose 200 or 300 maximum. So I think that helps quite a bit. And I think the dark horse in the room is Novix. I don't know, guys, what should we do about Novix? Novix is unofficial, but I know some of you have been incorporating it into your trading, despite of it being unofficial. No, but we cannot ignore the tremendous success. I mean, 90% accuracy, it is massive. My only fear is that it's too good to be true and that the edge will disappear. No, if dealers keep making VIX now more sanely priced, then probably ultra constant stable edge will come back into play, because now VIX contains good information, and Novix will not benefit from that. No, Novix doesn't use VIX. That's what it's called, Novix. No VIX allowed. So I don't know what to do. I don't know. We should do some kind of couple of weeks of testing it. I mean, we have been testing it, and it has shown us time after time that it works really well. But if you look at the data set, you can see that there were massive periods of underperformance in the data set, in particular when VIX was really low. So maybe we could give it a try until VIX goes below 20. No, maybe once VIX goes below 20, then edge will disappear. But who knows? So I just present the cards here. No, I like Leo Profit as an alternative. No, because Leo Profit has different trades. So they are actually different trades in the sense that they are only long iron condors or cherry iron condors, and also Novix. Now, for those of you that want to trade it, that's something that I wanted to do. And then let's look at the variance center here. So if we look at the variance center, we can see that we are slightly short gamma. We are neutral now. The GT level is 6,600 now, and we are at 94. So it's a big fight. You can see the market today has been in a big fight around that level. No red dots in the control chart, so it's pretty much just boring action. And you can see it here in RV. Intraday realized variance is around 13%. Is actually low with air quotes. No, it is low in the sense that it's low compared with the values we have seen in the previous sessions. So that's a good sign to see some kind of lowish value. The same for the last 30 minutes is 12.63, although it went down all the way to 5. No, so clearly the market today is just in transition. I guess players are expecting something to happen as soon as Wednesday or maybe tomorrow, I don't know. And but for now, I guess that's where the market is range bound right around the GT level. And you can see the imbalances are really, really low. Imbalances are not an issue. So there is not an issue. I mean, in terms of hedging from dealers, it's not an issue. In terms of hedging walls, we have big ones in 6,595, 600 and 605. So probably that's some kind of an spread. No, someone had a spread for today. It was not us. No, we didn't have that spread. We have the 670 and 6,500. So who knows who was playing that spread for today? This is a vertical spread play around the 6,600 and 6,605 strikes. So probably that's what is keeping the market in that area. No, is keeping the market in that area. The vertical spread. It could be interesting, because if it crosses, now if this is a true vertical spread, then it could cross swiftly. No, but we'll see how it goes. But for now, the trade from last Thursday looks like it's a neutral finish. No, we have a long risk reversal. It's a neutral finish, and the trade for tomorrow, for now, looks like a long iron condor. But my hunch is that it will flip to a short iron condor before the close. As this range starts to decrease, now notice the range is 0.8 minus 0.8 or almost 0.92, 0.92. It will start decreasing once options for tomorrow start to lose value. No? So once the options for tomorrow start to lose value towards the end of the afternoon, this range could be reduced quite a bit, and the signal could flip. So just keep an eye on that, that the signal might flip. Novix for tomorrow has a short risk reversal. And again, I think that it might change. No, it might either flip to depending on how much it shrinks. No, if it shrinks quite a bit, then it could flip all the way to pure iron color here as well. So just keep an eye on the variant center for you guys that you're looking for the traits. And I think that's it for me. Not a single question, so I'm kind of scared that maybe there was no audio during the whole video. But hopefully there was audio. No, hopefully there was audio. I'll check once the stream is up in Google, in YouTube. And for now, well, I appreciate the few of you that came to join us. No, I think we were 5 or 6 of us here. So, and for the rest that are watching at home during the recording, I hope that it was useful. And also, we'll also have our usual live video on Friday. I just wanted to do one before the one on Friday, just to talk a little bit about what happened in the last 2 weeks. But now, we are set for the normal regular schedule in GoToMeeting. Okay, so I have a comment, so at least I guess you guys were were paying attention. So take care, everyone. I'll see you in the room, and I hope you guys have a great rest of the afternoon. Take care. Oh, I have a question. End of the world trade. I don't know. Maybe tomorrow. No, if the ultimatum is real. No, if the ultimatum is real, there could be an end of the world trade. But it all depends on the pricing. I could look maybe today before the end of the session. I could look on how options for Wednesday are being priced, and if there is an edge, it has to be really near term. No, for the end of world, it has to be really near term, because if you go further, you go like weeks ahead or months ahead, options are going to be too expensive. So it has to be something that we can play for Friday, for instance, or for Wednesday itself, for instance. But anyway, I'll let you guys know. Take care, everyone. I'll see you in the room in a little bit.